Ladies and gentlemen, welcome back to the channel and happy Father's Day. I'm going to keep this video short, sweet, straight to the point because I just made a 20-minute video that did not pick up the audio and super frustrating. Now I'm going to narrow that video down to what you guys need to know in regards to this situation. There is a big one coming. There is a big crash coming. And I do not want to keep you guys ill-informed because of, you know, people are bullish and I'm scared of the reactions. I just really don't care, right? I want you guys to be as informed as possible on what's currently going on in our markets and how you can benefit the most from that with having the most knowledge possible. Now, I have started to hoard a lot more cash. I have started to get a lot more defensive in my positioning. Yes, I did buy some puts on Friday, and I will explain exactly why that is here in this video, as well as give you a rundown of my expectations for Tesla stock this week. So first and foremost, there's a big crash coming. That's a fact, in my personal opinion. Nobody could convince me otherwise. I've never seen this in my life, and I've been investing since 2018, 2017, 2018, 2016. That's when I started getting into it, like late 2016, started to get more active 2017, and then really active 2018. I've never seen the fear and greed indicator at 38 and the NASDAQ at the same time hit a new all-time high. Never seen that before. I think that in and of itself is like enough to sit here and say, yeah, we're going to have a crash. We are. Because that's so abnormal. Now, specifically what's going on is the Fed made an error last week. They made it clear to the markets that they are waiting for economic instability. They are waiting for data points suggesting we are more than likely heading into a recession, if not guaranteed going into a recession, to start cutting rates. That's not what the markets wanted to hear. So what you've seen on Friday was the Russell 2000 down 1.6%. You've seen the VIX up 6%. You've seen a risk-off day, whereas investors piled into big tech like Nvidia, which that's a whole other can of worms. That's, oh my gosh, I could make an hour-long video on Nvidia and the problems in that area of the markets. But really, long story short, is small caps, mid caps, stocks like Tesla, they are priced as if there is a decent chance of a recession. I wouldn't say they are priced for a recession at this point, but they are priced as if there's a 30, 40, 50% chance of a recession within the next 12 months. Nvidia is not. Microsoft is not. Meta is not. Google is not. Amazon is not. I struggle to wrap my brain around that. How certain areas are severely priced for a recession with good chances of having a recession, and other areas are perceived to be immune to it. That doesn't make a whole lot of sense to me. Now, in all fairness, Nvidia is like over half of the S&P's move year to date. And Nvidia did just go through a stock split. Historically, over the past couple of years, stocks that do go through stock splits tend to have a downside corrective period after the split itself. And Nvidia was down 0.5% Friday and after hours. It's possible that corrective downside move could be coming soon for Nvidia. Maybe this week, maybe, next month, maybe 3 months from now. And I don't know the exact date, and I will tell you, whenever I call for market downside, whenever I call for a crash or correction like we did in April, I can be a little bit early sometimes. I can be 2 weeks early. I could be a month early. I could be 2 months early. But very rarely am I wrong on just the overall, hey, this is coming next. So I don't think I'm going to be wrong here. I think I'll be 100% correct again. But I don't know when it will happen. It could start on Monday. It could. It could start on Friday. It could start on Tuesday when we have retail sales. Or it could start a month or 2 or 3 months from now. And I will tell you, I think the recession risk needs to get baked into big tech. I think that gives you the initial leg down in markets. And I think it could be quite aggressive. Think about it like a house with termites on the brink of collapse. You don't really know that until you get into it, right? And then you're like, oh crap, this house is about to fall, condemn the house and move everyone out. That's kind of where you are now. It's like you're one good, jump from a big guy on the floor and falling through the floor. that's where we are now. So I think it'll be aggressive when you actually do get that corrective downside move. And the craziest part about all of this is just to get back to where you were a month and a half ago in April, well, 2 months ago, really, that would be downside of about 14% of the NASDAQ. I don't think people are prepared for that mentally. And I think, I don't know, when you look at the market internals, they're worse than where they were in April. So could you fall 15 or 20% from here? Yeah, it's possible. Now, I think the big one comes if Nvidia misses earnings, if the AI trade, flatlines, dissolves, whatever terminology you want to use. And that could be sooner, that could be later. Not exactly sure when that happens, but that's when the big downside comes. I think a 10 to 15% move down from here could come any time now. And that would just be like Nvidia going through a, post stock split sell off, which is probably going to happen soon anyways. Now, if you look at the NASDAQ, not only did you hit a new all-time high on Friday, but you have hit 78.64 on the RSI, meaning on a relative strength basis, you are very overbought. The last time that happened was back here in December of 2023. You did end up going through about a 5% drawdown in the NASDAQ over the course of 4 trading days. So when it does come, it's going to be extreme, and I think it could be even more aggressive than that because of the mispricing out there in the marketplace. Again, how is one area of the markets so priced for a recession and the other is not? Does anyone remember 2022? Did everyone forget 2022, where we were in a technical recession from January through June, 2 quarters of declining GDP, and then throughout the year, stocks did poorly? That was because recession fears were higher, right? Nothing saved big tech, although big tech did a little bit better than other areas. It did not save the markets. And AI is not going to save the markets. AI is like an infant. It's a newborn. There's no companies bringing in AI revenue besides semiconductors. And that is fueled by investment in the perceived narrative that Microsoft and Tesla and Google and Amazon and Meta and all these other companies are going to buy these GPUs and they're going to, create very successful products. I would argue that now that it looks like the Fed is pushing us into recession, companies are going to become more defensive. Companies are going to not buy as much GPUs because after all, that's like throwing money in the fire. Just look at Nvidia's trying to get like a 1-year refresh cycle on GPUs. So by the time you're Microsoft and you actually create a product that everyone wants that is material to your business, you're going to go through generations, iteration after iteration after iteration of Nvidia GPUs. If you have tens of thousands of them now, how many more do you actually need? Probably none. Okay, so Nvidia has pulled forward a lot of demand. I think that day of reckoning is coming, and I think that's when the big one comes. But I do think a 10 to 15% correction in our markets is coming anytime now. And it's quite worrying because not a lot of people see this coming, and it looks so blatantly obvious. It's like sickening, right? And it really comes down to the Fed. They're going to push us into a recession. There's going to be a error made there. And that's super problematic. And you really seen this all highlighted on Friday. Russell down 1.6%, risk off there. The VIX up 6%. That's a measure of puts and calls on the S&P. So even though the S&P was slightly red on Friday, if you look at the headline S&P itself, you actually seen a lot more puts being bought than calls. In fact, there's about 2.5 times more puts for this Friday's expiration on the S&P than there is calls. So yeah, even positioning looks pretty negative. Now, that's the overall general, just short version of all of this. There's more nuances you can point to say, hey, markets are unhealthy here. And I don't think I need to point all of them out for you guys to fully know already that markets are pretty unhealthy here, right? Let's not be clueless. I think you guys are smarter than that, and you realize, like, yeah, markets haven't been healthy for a long time. And yeah, that's just where we are. So that's like for the short version of the 20-minute video that I made. And that's really the nuts and bolts of what you need to know. Now, I do think for Tesla and other interest rate sensitive companies, like a Tesla, like small caps, the stocks and areas of the markets that have been getting beaten down already, I think they'll probably continue to get beaten down. It may slow down a little bit if big tech starts to get beaten down. It wouldn't surprise me if Tesla and other areas of the markets kind of bottom out at some point over the next couple of weeks, see some more downside, but it wouldn't surprise me if big tech comes down and catches up to what other areas and other names like a Tesla have already done this year. Now, for Tesla specifically, I'm expecting a range between 188 and 160. Anything under 160 is possible, and that is a massive buy the dip opportunity around those levels, because the way I look at it is either crap hits the fan this year, the Fed starts to cut rates over the next couple of months. By 2025, maybe midpoint 2025, early 2025, maybe stocks can start to do a lot better. It looks like if Mr. T-Man wins, rates are going to fall a lot. Wall Street's going to wake up and say, wow, this is another great time to invest in markets. Or it takes a little bit of time. The end of 2024, if not the beginning of 2025, is bad. Recession fears come about, and the end of 2025 is good. I think 2025 will be better than 2024 regardless. Not on a headline S&P NASDAQ basis necessarily. That depends on Nvidia, as you know. If Nvidia does well throughout 2025, then that'll be good. But I do think you will see a broadening out of our markets, an outperformance of Tesla, an outperformance of interest rate sensitive and small cap stocks regardless in 2025. That's the way I'm looking at it. Yes, I am raising more cash right now. I did buy some puts on Friday. I plan to buy some more. If you guys would like to come see my trades every time I make a trade, check out that link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.